A TPO, or time price opportunity, which it actually stands for, or it can be referred to as a market profile, is a market analysis tool used to visualize how long price is accepted at different levels throughout a trading session. It organizes price activity horizontally by time spent at each price rather than by traded volume, revealing where the market has spent the most and least time facilitating trades. The simplest way to think about it is visualizing the VP, which you can see on the right side of my screen, which measures volume. A TPO measures time. More time, more acceptance. A TPO chart divides the trading session into equal time intervals, which you can see there's like boxes. If you zoom in, there are letters and numbers. Each one represents 30 minutes of time, or obviously, but every tick or every box or every letter represents 30 minutes spent in that area. As sessions usually develop, the letters stack horizontally at each price level, forming a profile that shows how often price was visited. Levels with many letters indicate sustained acceptance, while those with few letters reflect brief rejection. So you see less letters at these lows shows rejection, same at the high, rejection at these highs. Or we have more letters or more boxes, you can see this where we spent more time or where we showed acceptance. Now, few key things to look at when it comes to TPO is the single prints, excess, poor highs and poor lows, and unfinished auctions. Single prints are price levels where only one TPO letter appears in the profile. They represent areas where the market moved through quickly without returning, indicating a lack of acceptance and rapid directional movement. Single prints often form during initiative activity where aggressive buying or selling drives price through levels without allowing the market to build time. Because these levels were not accepted, single prints frequently act as areas of fast price movements when revisited. So here, we can see single prints, quite literally single printed letters or single printed boxes within the TPO, not on the outside of the TPO, but within the TPO, indicating strong buying movement. And you can see once these single prints came to get revisited, we ran straight through them quickly. Now, excess occurs when the market reaches an extreme and is met with strong opposing participation, creating a sharp rejection. On a TPO profile, excess appears as a tail of two or more consecutive levels where only one period traded before the market reversed. Excess signals a clean completion of the auction in that direction and suggests that the market found a definitive boundary. So you can see more so like single prints at the low or the high. When you have stacking single letters at the high or low, that's excess. I more so like to see two and more single letters. So we can see all of this. It's excess. All of these letters right here would be excess. We have excess at this high, excess at this low. Usually excess tends to be used as support and resistance once revisited, so that is a very key factor in using excess. Excess also indicates strong reversal and participation by one market participant. So if we have excess at the low, strong buying, excess at the high, strong selling. Next, we have poor highs and poor lows. A poor high or low occurs when only a single TPO period appears at the extreme of a profile. Unlike excess, where two or more single prints form a clear tail indicating strong opposing activity, a poor extreme reflects a weak or absent response because the auction was not firmly rejected at that level. The market is likely to return and retest it. Poor highs and poor lows represent unfinished business. So here we can see at this low we only have one TPO period. At this high we have one TPO period as well, indicating this poor low that we have and this poor high that we have. So sooner or later we can expect this poor low to be retested. Same here, our current day we have a poor low. If we close not at this poor low, then we can expect this to be retested. Second to last, we have unfinished auctions. What an unfinished auction is when two or more TPO periods reach the exact same price at the extreme of the profile, creating a flat aligned edge, as you can see here. Also here. This structure indicates that the market tested a level multiple times across different periods but failed to break through because the auction was left incomplete. Price has tendency to return to these levels. The market left unresolved business at that price, and when conditions allowed, it will often retrace to sweep through the level and finish what it started. Lastly, I want to talk about a buying or selling tail. A tail is formed at the extreme of a TPO when price moves to a level and gets immediately rejected so fast that only one or two letters print before the market turns around. So here we can see we have a buying tail at the low, indicating the strength in buying. Now in terms of the tail size, which does have a lot of meaning, you can go about it by looking at it like this. There's two letters. It can possibly be a clean rejection, decent signal that the auction is most likely complete. There's three or more letters, super strong excess, and very decisive rejection. Higher probability that that level will hold. I like to look at tails when I'm creating a narrative or a daily thesis showing that the aggressiveness or the participation that we had either at a high or low at that tail should be repeated once we approach that level again. So what I like to see tails hold, or I like to see them repeat the same pattern. So we have a buying tail indicating strength in buying. Once we come back down to this level, I would like to see those buyers stay aggressive once again. Now, whatever I'm looking at, whether it be the DOM or the footprint or whatever, if I don't see those buyers stepping in with strength, and then that leads me to believe that this level will be broken through, and there should be a full traverse in the current trend.